Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And I will be talking about setups today, and I will be talking about just the underlying asset, and setups can be taken any number of ways, with futures, with shares of stock, or with options. And questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. And Second Winds says bonjour. Thank you. Glad you're here. Welcome. All right, my agenda for today, I'm going to go over economic data and events for today, wrap up the week, and then briefly talk about next week. Then I'll go through my positional analysis. I want to review some setups from this morning, and then we'll take a look at the live market. So if anybody has anything that they want me to take a look at during the live market, I will be glad to do that. So Sampan asked about NVIDIA, and I will be covering that later on in the setup review. All right, so let's get started. First of all, today was the June options expiration, and this is quite a large options expiration. Let's just take a look at, this is SPX, and I'm going to show this is the June options expiration, the expiration today. What this is showing is market makers delta notional on the vertical axis, and then the different expiration. So again, this is the June expiration on the far left of this chart. And the thing to note here is this large orange bar is showing call delta notional. So this is this is huge compared to the put delta notional. So this is a very large call dominated expiration. And typically after a call dominated expiration, the market consolidates or maybe trades a little bit lower. I'll talk a little bit more about that in a few minutes. So that is the options expiration for today. And note, the SPX had an AM settlement that was already at the open this morning, and then there's also a PM settlement at the close today. All right, so the other news event for today was consumer sentiment, and that came in a little bit better than expected and also better than the previous reading. All right, and next week, just to note, Monday is a market holiday, and I will not be streaming, and in addition, there will be no Bookmap streams on Monday. Again, it's a market holiday. All right, let's start with positional analysis now. And this is the S&P 500 in Bookmap, ES Futures. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. I'm going to go to a Thinkorswim SPX chart and note that Spotgamma has corrected the Thinkorswim script that shows these Spotgamma lines. So the script is working now. All right, let me point out some levels on this chart. So first of all, the dashed purple line is the lower and upper edge of the expected move for the week. So that's something that I put on my chart last weekend. And note that SPX is trading massively above the upper weekly expected move. This is maybe the largest move above the weekly expected move that I've seen in some time. So that is the dashed purple lines, and here is this is the upper weekly expected move right here. And then this is the JP Morgan collar, the short strike of the JP Morgan collar that expires at the end of June. So maybe that may, if price moves down pretty substantially, that may come into play. All right, the other levels, the dashed blue lines, are showing the upper and lower expected move for the day. And there was a question in Discord about this earlier today. DNT, I guess, don't matter. DNT matter. I don't see them in here. So anyway, this is using plus or minus 33 points yesterday at the close for SPX. So SPX is trading in well within the range that was expected for the day, but well above the upper weekly expected move. All right, so let me point out the Spotgamma levels now. Got them back on my chart. So first of all, there's the put wall at 4,000. That's the strike with the largest net negative gamma that can be expected to act as support. It's remained at that level for quite some time, and it's well out of play today. All right, the next level is the volatility trigger at 42.95. Let me clean this up. So we just focus on the Spotgamma levels now. So there's the put wall, the next level, the volatility trigger, and that has moved up from 42.45 yesterday to 42.95 today. And that is Spotgamma's proprietary gamma flip level. And below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And on the other hand, above the level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And the next level is the 4,400 level. That's right here. And this is the absolute gamma strike. That's the strike with the largest absolute gamma. And then finally the call wall, and it's hard to see on this chart. We'll take a look at a one-day chart in just a moment. So there's the call wall at 44.25, and note that level also moved higher from 4,400 yesterday to 44.25 today, and that's the strike with the largest net positive gamma, and that can be expected to act as resistance. And SPX right now is trading above that level, but pretty close to that level. All right, so that is a 30-day 1-hour chart. pretty strong uptrend in SPX, up from about 4,100 to 4,400, 300 point rally over a period of days. And in YouTube, Rudy asks, will this be archived? Yes. All my webinars are recorded and are available on the Bookmap YouTube channel. And Rudy also asks, why is this video not in 1080p? I don't know. I don't have any control over that. I'm watching it in 720p, and it looks okay. I think if you do want to see it in 1080p, please join us in Bookmap Discord. Bookmap Discord is free to everyone, whether you subscribe to Bookmap or not. And I think so again, and I know for sure that I'm streaming in 1080p in Bookmap Discord, and also I believe the audio may be better as well. All right, so let's take a look at another Thinkorswim chart. Let's go to a 1 day, 1 minute chart to show the levels that are in play for today. So the same levels are on this chart. We're just zoomed into the price action for today. So this is showing you can see the lower and upper daily expected move at the bottom and the top of the chart. And then the primary level today, here is the kind of this cluster of levels with the 44.20 level at the lower end of that cluster, and then there's a combo level at the 44.26 level, and then the call wall at 44.25. And those levels have acted as support today. And you're welcome, Rudy. Okay, so those are the levels that are in play for today, and definitely after the strong rally yesterday, SPX is in a trading range today, consolidation as can be expected. All right, let's take a look at Bookmap now. And again, I'm going through my positional analysis, just kind of reviewing the levels that are in play for today. And I'm primarily using my cloud notes here. So I have the Spotgamma levels, and I calculate the point difference every day between ES and SPX, and Spotgamma, the cloud notes, they only calculate it once at the beginning of the day, so it may be a little bit off. So right now I'm using a 45 point difference between ES and SPX. I think Spotgamma is using a 47 point difference, so just a little bit lower. All right, so the levels that are in play for today. So I have the Spotgamma levels, both the SPX levels and also combo levels that combine SPX and Spotgamma into one level, converted to an equivalent SPX number, and then converted to an equivalent ES number. I also have SPY levels here. There's the SPY 443, and note that did act as resistance this morning. And here's the SPY 442. That level has also been in play. And then here's the 44.26 level, combo 1 level, as well as the 44.25 level. And then finally, down below that, the level that acted as support today is this 44.22 combo 3 level. And again, the S&P 500 trading in a pretty narrow range today. And I'll talk about setups in a few minutes. So just to cover shifts and levels again. So again, the volatility trigger did shift higher for SPX as well as the call wall, and that's bullish. And then for SPY, those levels shifted higher as well. Volatility trigger shifted higher, and the call wall shifted higher from 440 to 450. So again, that's bullish for for SPY, just taken alone, out of context, not looking at anything else. All right. And when I talk about setups, I want to I've got some screenshots from yesterday that I want to compare with the chart for today. All right, let's talk about the NASDAQ for a moment. So here's the NQ futures. I'm going to take a look at a QQQ chart first. So these are showing this chart is showing the QQQ levels that are in play for today. This is a thinkorswim 1 day, 1 minute chart. And for the NASDAQ, for NDX, the volatility trigger and put wall did shift higher. Call wall and absolute gamma strike remain unchanged. And then for QQQ, the call wall did shift higher to 375, so it's not so there it is, well above the price action for today, which is really focused mostly just above the 370 level, which is the absolute gamma strike, the new absolute gamma strike that shifted up from 360 yesterday to 370 today. So bullish shifts higher in in the NASDAQ as well as the S&P 500. Sorry about that. All right, so that is QQQ, the levels that are in play for today. All right, let's go take a look at the Bookmap NQ futures. So not as clear a read to me as far as levels go in NQ versus ES. And Rudy asked, how can I contact you directly in the future? The best way is to join Discord and join Discord and look for me. My name in Discord is Doug P. D-O-U-G capital P. All right, Alex says, is it me or does anyone else think today was the hardest day of the week to trade? It depends. I thought today was a fairly easy read. I think, well, for S&P 500, if you're talking about the S&P 500, I think it has been the order flow and the hedging flow have been pretty easy to read for the ES for most of the week. And DM Vancouver BC says, can I cover the Russell? I'll take a look at that in Hero. I'm sorry, I don't have the Russell up in Bookmap. I don't trade the Russell, but we'll take a look at it in Spotgamma Hero. All right, so here's the NASDAQ. Another range day, choppy day. And it looks like around the NQ 15,450 and the QQQ 372 and also this NDX QQQ combo level did it somewhat act as resistance. Price overshot it early in the morning, and then there were a number of support levels here in the morning, primarily during the morning, primarily this NDX 15,150 large gamma 1 level. But right now price is really trading as we saw on the QQQ chart between the QQQ 370 absolute gamma strike and the 371 level, and that is where the volume for NASDAQ is concentrated today. All right, so that's the NASDAQ. I talked about shifts and levels. Let's take a look at the Vanna model, and then we'll wrap up the positional analysis. So this is SPX. This is the Vanna model, and I'll quickly explain this chart. So this chart is showing market makers' delta notional or delta exposure, and how delta notional changes with changes in price. And Alex asked, can you show me when and what levels you were looking for this morning? I'll talk about setups in a few minutes, review setups, and I'll talk about primarily the S&P 500. That's what I was trading from the short side. All right, so this is the Vanna model for SPX. What this chart is showing is how market makers' delta exposure changes with changes in price. That's shown by the light gray curve. And this is showing that as price increases, market makers will need to sell futures to hedge their delta exposure. Remember, market makers want to remain delta neutral. And so that's the light gray curve. Then this purple curve adds implied volatility to the equation. So it's showing how market makers' delta notional changes with changes in price and implied volatility. And that's the Vanna effect, the change in delta with a change in applied volatility. Hence the name of this chart, the Vanna model. So what this is showing is if price increases, market makers will have slightly less delta notional to hedge as price increases, as predicted by the delta only curve. On the other hand, as price decreases, they will have more delta to hedge, and they will have to sell futures as price drops and implied volatility increases. All right, let's see where SPX is trading now. Let me take a quick look at a watch list. So I've got SPX at about 44.30. So that's somewhere around here between these two lines, so near the bottom of the curve. So this is not showing at this point much of a headwind or tailwind for price. All right, so that's the Vanna model. And then finally, let's take a look at some key data. And I'm doing this just to understand how market makers are positioned at the beginning of the day. And I'm going to take a look at the Spotgamma Gamma Index and Gamma Notional for SPX, SPY, NDX, and QQQ. And note for SPX, SPY, NDX, and NDX, Gamma Notional is all positive. So again, that means that market makers' position on the gamma curve at the beginning of the day was positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure. And another thing to point out is the Spotgamma Gamma Index. This is a proprietary measurement of the total amount of market gamma, and it varies from -4 to +4. So in a positive Spotgamma Gamma Index, that is indicating again that market makers' position is positive, and that tends to indicate a lower volatility market. And at about 3.2, this Spotgamma Gamma Index is quite high, quite positive. And one thing to point out, that number did increase from yesterday. And then on the other hand, all of the gamma notional numbers did decrease slightly from yesterday. And QQQ in particular shifted from positive to negative. So gamma notional for QQQ at the beginning of the day was slightly negative, even though it is trading above its volatility trigger today. All right, so that is the bulk of my preparation, the planning, and I want to point out the Spotgamma AM Founders Note. So Spotgamma provides an AM and PM Founders Note that provides some additional insight. And the last few days, Spotgamma has been talking about consolidation after after expiration today, and today they were actually using the word correction, I guess, given the wild rally yesterday. So this was, I think, an interesting quote from the AM Founders Note today, and occasionally I like to show a little snippet from the AM Founders Note indicating that what's happening now through an options lens has been driving markets higher and now is bordering on the absurd. And I can't help but to agree with that. All right, so that is the. So anyway, based on my, just based on the numbers, trying to stay quantitative, my thesis for the day was looking for lower volatility, a range day, based on the positive gamma, and then based on the shifts higher in the levels, neutral to slightly bullish. Although I did, as I say at the beginning of this presentation, I always confirm my thesis with hedging flow and order flow. All right, so let's take a look at some setups. Let's start with the S&P 500. Let me point out a couple things on this chart, and then I want to compare and contrast yesterday with today. So this is showing iceberg orders, stop orders, and cumulative volume delta, and this is cumulative. All are cumulative or sum since the beginning of the session, and this MBO data comes in when that shows stops in icebergs, comes in when I open Bookmap at about 7 a.m. Eastern Time. And the CVD is actually, I think probably from, then I load some back data that probably has some CVD data from the open yesterday afternoon. All right, so note those numbers, and this is, to me, fairly bearish order flow. All these numbers are negative, shifting lower. Let's take a look at, first of all, let's take a look at a Bookmap chart from yesterday. I've got a screenshot that I want to bring up. So this is to compare yesterday with today. And note primarily the number of stops here. Positive 12,400. Those are buy stop orders fueling that move higher. That's shown by this rising yellow line. Also this cumulative volume delta, quite positive. And then it looks like some large iceberg orders came in at the end of the day, shown right here, to end up with this number also positive. So all positive numbers, and especially notable is the large amount of buy stop orders helping to fuel the move higher yesterday. And let's go back and compare with today, all negative. And not really much in the way of stop orders, minus 81. And again, I'm looking at the numbers in the lower right corner of my screen. All right, so let's take a look at one other thing. I'm going to take a look at Hero. This is Spotgamma Hero. Let me go back out. So what this chart is showing is hedging impact of real-time options, hence the name Hero, H-I-R-O. What this chart is showing is price for SPX with the white line, and then this is the Hero signal, showing options trades and market maker hedging activity for a combined signal for the S&P 500, SPX, SPY, XSP, and ES futures, all into one combined signal. And right now it has shifted positive, and we'll take a closer look at the components of this signal in just a few minutes. So right now it's positive, just under 400 million. Let's take a look at the, let's start with the individual components. So first of all, SPX, positive 1.03 billion. SPY, negative, minus 486 million. And then ES futures, negative, minus 126. And giving us a slightly net positive value for the entire signal. All right, so let's zoom in on this. And I'm going to separate out puts and calls. All right, so today traders are buying calls, shown by this positive orange number here, 1.9 billion. They're also buying puts. So almost, but not quite, canceling out each other. And that is minus 1.6, a little over almost 1.7 billion. All right, I want to contrast that with yesterday. This is a screenshot from yesterday at the end of the day, and this is a massive number for calls for the S&P 500. I did post this in Discord yesterday, and I've never seen a number this high. And then in the Spotgamma AM Founders note that the Spotgamma AM Founders note noted that yesterday the SPX call volume was a record high for call volume yesterday, and that makes total sense based on seeing this number here. So there's no question as to what was driving price action yesterday in the S&P 500. It was call buyers and buy stop orders that I showed in these two screenshots from yesterday. Buy stop orders and call buyers. When traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. All right, so that's yesterday. Now let's focus on today. And I'm going to go back to the total signal here, and I primarily trade in the morning. So I'm looking at order flow and hedging flow when I'm making my trading decisions. All right, let me take a look at questions. All right, so Alex asked, I'll talk about where I found it easiest to trade in the morning. Hero, he asked, is Hero the #1 tool you use for hedging flow? Hero is the only tool that I use for hedging flow. So I use Bookmap and Spotgamma. And Alex asked, what do you use for order flow? For order flow, I look at Bookmap order flow. Now you're asking, for example, I like using the DOME. So I think you're talking about trading, and in trading I use a different platform. So I can see my trades in Bookmap, but I also place my trades on a DOME. I like the brackets and the being able to put a trade in at exactly a precise level. All right, so we'll take a look at setups for the morning. Separate out puts and calls. So looking at the morning session, note this number. At around noon, traders were net buyers of puts, and the put buyers were winning. So this is minus 1.3 billion for the blue line versus positive 300 million for call buyers. So this is what I was looking at, and this helped to, along with order flow, help to set up shorts right at the open or soon after, just a few minutes after, just after 10, and I'm watching the blue line primarily. Traders buying puts, and then around 10:30 another short. So I'm watching this and order flow. So we have short setups, maybe 9:35, 10:10, 10:15, and 10:30. All right, so let's go take a look at Bookmap now. Let's zoom in to noon. All right, so we know that traders were net buyers of puts, taking negative delta positions during this time. So now watching order flow, I can see this quick run up to this SPY 443 level, and then a shift from green dots, aggressive buyers, to aggressive sellers start to come in, shown with the pink dots. Note that also larger traders were fading this move with iceberg orders. That's shown by this falling light blue line. Also here's, it's kind of obscured by the buy stop orders, but large traders selling with iceberg orders. Looks like there's another one kind of obscured too, but that looks like over 2,000 contracts. And you can just tell by this falling light blue line. Also, sell stop orders and cumulative volume delta were also falling. And that was a quick drop down to this SPX 425, 4425, 4426 level. All right, so there's the first short setup. Here's another quick short, right at this 442, SPY 442 level. And another short setup at that level again, and then finally a short setup. So during this time, I know that hedging flow was bearish and order flow bearish. Iceberg, stops, CVD, all negative. I'm just looking for short entries, trend breaks, and reversals lower at key levels. All right, so that's the S&P 500. Then after that, we can take a look at the live market and see what's going on. The next is NQ. And I'm primarily looking at order flow here, and note falling icebergs and stop orders. So the yellow line, the blue line are all falling. These numbers are negative. So I'm definitely looking for shorts here. Let's go take a look at Hero. For NASDAQ. And actually, it's a little bit easier to see the S&P 500. This total line showing puts and calls is definitely negative in the morning session. Or let's take a look at NASDAQ now. And not nearly as clear. You can actually see, zoom in on the the first 20 minutes. Hero is definitely negative, setting up a short. Again, I thought the I thought the S&P 500 was an easier read, both definitely hedging flow and order flow as well. All right, Alex asked, how can I set up my book map like yours? Alex, join us in Discord, and you can ask questions in there, and I'll be glad to help you. If you have any specific questions, I can show you various settings in the webinar today. All right. He also asked if like to be able to see what you can see on the bottom of your book map. So let's go back to Bookmap. So I'm showing showing stops and icebergs. That's part of the MBO bundle. That's an add-on to Bookmap. You can buy that or subscribe to it in the Bookmap marketplace. And CVD comes default with all versions of Bookmap. And then I have these in sum mode. Everything is in sum mode. So here's the stops and icebergs subchart, accumulated sum mode. All right, let's review a couple of stocks here. So first of all, today is the primary monthly expiration, and one thing you can look for on especially a monthly expiration is a call gamma unwind. And this is my watch list, and I've sorted this by next gamma expiry. So this is showing the percentage of gamma that is expiring at the next expiration, and that's here. And note, this is all for today. Let me just scroll down on this chart. So this is all for today up until SPY and IWM. And anything over 30% is typically, Spotgamma considers that to be significant. So anything over 30%. So what we're going to do is we'll start with AMD, and while I'm on NVIDIA, Sampan asked earlier about the call wall for NVIDIA, and that is currently at 430, and it did shift lower from 450 yesterday. All right, so let's take a look at AMD first. That has the most gamma expiring today. Let's take a look at composite view. So we can see that this is showing that calls dominate above the 127 strike. So traders have been buying calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And these are calls that expire, we saw over 55, almost 56% expiring today. Those calls are quickly losing value as expiration approaches and as price drops, and market makers no longer need their delta decreases. They no longer need their long stock hedges, and they can sell stock. And also, with all the demand for calls for a lot of these stocks, those calls, the implied volatility has increased for calls. They're very expensive, and it requires a continuous move higher to support the prices and implied volatility for those calls. So anytime implied volatility drops, demand drops for those calls, plus they start to expire, they're losing value. That's the charm effect. The change in delta with a change in time as time passes, market makers can sell their hedges, their long stock hedges. All right, so let's go take a look at AMD, I'm sorry. So here's AMD, and there's your call gamma unwind. Let's take a look at Hero for AMD. Go back to Hero, go to AMD. And note that 125 is the call wall and the key gamma strike for NVIDIA. AMD, I'm sorry, I keep doing that. AMD. And so far today, traders are selling calls and buying puts. Kind of a choppy Hero line there. We'll take a look at the total signal. So again, they are buying puts and selling calls. And the call gamma unwind is happening in AMD as it trades below the call wall resistance level. All right, let's go to NVIDIA now. That was the next stock on the list. Take a look at this. And there's the 430 call wall that did act as support today. So traders are also selling calls and buying puts today. And Alex says, and looks like a good short. No, I don't know if you mean NVIDIA or AMD. So AMD was a good short this morning. If you caught it right at the open with that call wall acting as resistance. All right, so there's NVIDIA. Overall, hedging flow bearish, slightly bearish today. A choppy day for NVIDIA. We're going to take a look at Bookmap now. So here's NVIDIA. choppy day. And note, this is a lot of stocks had this large, huge opening print today. That's pretty typical, but it seems unusually large today. Maybe that's with the expiration. So it really obscures the order flow for the rest of the day. So you have to, in Bookmap, zoom so that is not showing. And again, a pretty choppy day in NVIDIA. So I did not trade NVIDIA today. So if you're asking, Alex asking about NVIDIA, it looks like now it is making a lower high below VWAP, although VWAP, given this chop up and down, is pretty flat. Let's take a quick look at Microsoft. Microsoft was a good short today. Again, the massive opening print obscuring the order flow for the rest of the day. And note that 350 was the call wall. So when I see a level like that, that gives me more confidence when I see price reversing near a call wall, a level that I expect to act as a resistance. That gives me more confidence looking for a short. So here, this was pretty quick. So if you were prepared, looking for this, you could have bought a put, for example. But again, you had to be pretty quick. That was a quick drop. We'll take a quick look at Hero for Microsoft. All right, so there's Microsoft, and there's the quick drop at the 350 call wall key gamma strike, and during the morning there's definitely a strong correlation between hedging flow and price action. And Alex says tech looks like it slowed a bit today, and yeah, again, that was really to be expected with traders buying expensive calls all week. You remember, as when there's a demand for an option, price goes up. Just supply and demand, implied volatility goes up, and so when again, when that implied volatility increases, those calls increase. It takes continual move higher for those calls to retain their value. And if price drops, if traders are taking profits, and also the charm effect comes into effect, those calls start to lose value, and market makers can sell their long stock hedges. All right, so Alex asked, you think a QQQ short would have been good this morning? I thought an S&P 500 short was a little bit more clear to me. That's what I traded. All right, Truman is asking about Tesla. Let's go take a look at Bookmap for Tesla. So Truman, you say at 1208 Tesla was rising with large sell volume dots. What does that indicate? Also, your chart is different from mine. Mine shows large red volume dots at 1208. Let's see. Are you still talking about Tesla? So Tesla, I have found that there often is not a strong correlation between the color of the volume dots and price action. It's much easier. The order flow to me is much easier to read in the index products for ES and NQ versus any stock or any ETF. All right, so let's take a look at CVD for Tesla. And I don't, this is why I don't show CVD on my stock charts. I think it is not that meaningful. All right, so there was a request earlier to look at the Russell, and we'll take a quick look at that in Hero. I don't have the Russell in Bookmap. So there was somewhat of a correlation. This is a combined signal of RUT and IWM. So here it is for Russell, and so in the morning session, traders were buying puts, selling calls, and now they've started buying calls. And so far, price has not responded much. All right, so Red Panda says you bought stock, coin, Neo, Billy. I'm sorry, I can't review your trades. I can show you. We'll take a look at coin here in Hero. I don't have any of those stocks in Bookmap, so I can't review specific trades, but we can take a look at coin. So now there's a fairly strong correlation between options trades, hedging flow, and price action in Coinbase. And note that 56 is the call wall, and now price is trading right up at that level. Let's see if there was an alert. So actually there was an alert from earlier today that Coinbase breached its call wall right after the cash open. And that's shown right here. So Red Panda, it depends on your time frame. If you're day trading and you bought Coinbase down here, if you're watching hedging flow and price action bought down there, then you're doing pretty well. If you have a much longer holding period, then it may not matter. All right, let's go back to the. I've got a couple of minutes left. Let's take a look at the S&P 500. Hedging flow up and down all day, so slightly positive for the day. Again, the combined signal SPX, SPY, and XSP and ES futures. Let's go take a look at the Bookmap. So order flow continues to be bearish. One thing that I follow closely, it's a little bit easier to see here, is the stop orders. This is a very good directional indicator. So far what I see on this chart is that right now sell stop orders helping to fuel the move lower. Iceberg orders are not coming in to buy. They often will buy weakness. They are a little bit here. We'll zoom in on this. but it so far not having an effect on price. Let's see if we can zoom in a little bit. And so if we zoom in a little bit, we can see that larger traders are starting to step in and buy. And this is around a level that has acted as support earlier in the day. So looking for a potential reversal here just based on the buy stop orders, or the iceberg orders. But CVD and stops, order flow, according to the cumulative volume delta, and sell stop orders still helping to fuel the move lower. Although watching these iceberg orders may be an early indication of a potential reversal higher. Let's go take a look and see what options traders are doing. I'm going to change my rolling window period to 30 minutes. So far, options traders, it looks like for around 10, 15, 20 minutes, they were taking positive delta positions. And now they're taking negative delta positions, helping to fuel the move lower. Truman asked, are iceberg orders always buy orders? No. So iceberg orders can be buy or sell orders. And again, they're all right, so Truman asked, how can you tell if they are buy or sell? By color? Yes. And also by position on the chart. So let's go take a look at Bookmap. So you can, Bookmap is very flexible about how you can adjust it to suit your own needs, so, and the way you like to see things. And I'm very color oriented, so I have blue for buy iceberg orders, and I'm showing that below the chart, and then I'm using this pink for sell iceberg orders, and I have that above the chart, above the price line. So that's my preference. That's what makes sense to me, and that's how I like to see it. So again, notice here the divergence, some buy iceberg orders starting to come in. Sell stops, CVD, continue to be negative. Price is at a level that has acted as support earlier today. Let's just take a look. This is about 1 o'clock. I'm going to go back and take a look at Hero. So here was the much better setup. Notice that Hero starts to drop pretty sharply, just around 12.55, and then price slowly responds, and then finally reverses much lower around just after 1. All right, let's go back and take a look at Bookmap. So we know that especially today, again, I was looking for shorts. All right, so let's go take a look at Bookmap again. So Sampan asks, what caused the sudden move down? And it looks like, for the most part, this has been pretty much a steady downtrend. I'm not quite sure what you mean, but if there's any sudden movement in price up or down, it's hard to say. You know, some large trader just comes in with a large sell order. there's no way to predict that. So this move down, if you're talking about this right here, there's no way, that's only, about 5 points. So, who knows? Right, so iceberg orders he's talking about. So here's a sell that looks like about 113 contracts, and then the buy for 385. So net positive. Iceberg orders rising light blue line. So again, all I know that if price is at a potential support level. Larger traders are buying with iceberg orders. Note this level was the low of the day earlier. But again, this was the better setup right here, the short, and that was actually led by options traders. That's what Hero showed, that options traders started taking negative delta positions before that move lower, and then order flow is clearly signaling that. Note this stop run shown by the small green dot there, buy stop orders fueling this move, this kind of run higher up to, let's zoom in on this. I'm going to darken up the heat map a little bit. Notice in the heat map showing this liquidity right at the 44.85 level, this buy stop run up into that liquidity, and then price reverses lower. Aggressive sellers start to come in. Price makes a slightly lower high and then continues to drop with lower highs. And Sampan, I don't look at typically. I'm not going to debate about competing iceberg orders and these little 5-point moves up and down. I'm kind of looking at a bigger picture here. So I'm looking at, again, I see that net larger traders are buying with iceberg orders, shown by this rising light blue line. I don't have to debate about one here and one there, but sell and buy, and I can see that net this is rising. And just as I talked about, this level has been support in the past. So, that's two clues that price could reverse higher. So beyond that, I'm not making it, not trying to make it any more complicated. Again, I would be watching Hero on my other screen, and I can see, I know that this is a potential reversal level, and I can see that the bullish order flow starts to come in, some green volume dots. So I'm prepared for this, knowing that I have this level on my chart. Again, I know that it will support in the past, and who knows if it will act as support now. The sell stop orders continue to overall continue to fuel move lower. CVD is is still bearish. Let's take one last look at Hero and then I'm going to wrap it up. I've gone over my time. See if we can gain any additional clues from options traders. And remember, we're on a 30-minute rolling window period, so we're looking at a looking at less data, trying to get more information, getting a closer look. And so far, I do not see any really uptick in options trades that would lead to a move higher. All right, that's all I have for today. I want to thank everyone for watching. Thank you for all your questions and comments. Alex, Rudy, and others, second wins in in YouTube, and Truman and Sampan, Red Panda in Discord. Again, thanks for your questions and comments. Everyone, have a great weekend. Remember, Monday is a holiday, so I will be back on Tuesday. So have a great holiday weekend, everyone. And thanks again for watching. Thanks for your questions and comments. Bye.